Everyone, it's Pete Carmesino here at Chaikin Analytics. This is our weekly sort of stock of the day, kind of looking at what's going on out there, taking a snapshot of one specific name kind of each and every week. It's kind of an alternative to our Power Feed article. So this video is kind of looking at one name, and that name today is DexCom. Now, if you don't know anything about DexCom, they're obviously in the healthcare sector, really more healthcare equipment. And a lot of it is really a glucose monitor, right? And so it's basically, kind of helps folks with diabetes treat and maintain their insulin levels. So today, the stock is down 42%. Now, they obviously reported earnings, and earnings came in better than expected. However, they did lower guidance on revenue and profit margin. So here's the thing. Management called out three situations that are company specific, I should say. Sales force expansion and that disruption that from that expansion. I'll get into that really quickly. There's a channel weakness, obviously, on their specific product mix. So a lot of analysts looked at, sort of expressed the surprise at the degree and the number of near-term headwinds that kind of emerged, especially in light of management's reiterating guidance at their investor conference just in June. So there's a little discrepancy there. There's a little kind of maybe management didn't really have their finger on the pulse of what was exactly going on. But none of this appears to be GLP-1 specific. In other words, people are kind of attributing that potential sort of new wave of prescription medicines out there to help people sort of fight obesity, that eventually less folks might need glucose monitors. That's not really kind of taking place yet. Now, I've done a few calls today trying to figure out exactly what's going on. Nothing really specifically coming from those, but you did see a competitor pre-announce stronger than expected Q2 revenue, and that was on the same day today. That's symbols PODD. But we're talking about DexCom today, and I kind of want to just look at the chart. Were there any signs? Were there any kind of trends in this chart that would have notified you to either avoid or start to protect this? And I think there were, and let's look at those right now. All right, here we are on the chart of DexCom. Now, folks, our rating updates on a daily basis. This is already bearish, and it's been bearish. How do I know? I can show you right down here. We basically turned bearish, or the power gauge turned bearish on the week of July 15th. That Monday, it turned bearish. And that's coming from the Friday, the end of the week of July 8th, where it was just neutral. And it was neutral for quite some time. However, the breakdown really occurred here back on May 8th, around 127 and change. The failure to move along the long-term or above the long-term trend sort of showed the breakdown continuation here. And then obviously on this specific day on May 30th, it was down, about 10 or so points and trading right around that 118 to 120 level. But it never really recovered. Money flow has been negative, and the power gauge was downgrading this prior to earnings. Okay. Now, even though earnings were okay, which they have been for the last 4 quarters. When I say okay, I mean just beating estimates. That's showing growth and good management capability and things of that nature. But the idea that a stock like this, after giving good guidance back in June, could all of a sudden miss and come in and say the guidance for forward-looking revenue is much less than expected. I tell you, that doesn't sit well, and I know it doesn't sit well if you're an investor. But the idea of understanding trends and being sort of able to follow what's going on prior to these announcements, to be quite frank, there's really not a lot of reason to be owning this stock back here in May. And certainly with this follow through, lower lows and lower highs, you had all kind of technical indicators, but the power gauge was way ahead of this move, even by just mere days of downgrading this from neutral to negative back here on July 16th, like I said, that week of July 15th. So you had all kind of sort of alerts and triggers and signals that were kind of flashing red way before today's announcement. The Salesforce expansion drove lower the sort of, the productivity per representative, and that resulted in lower new patient adds. If you understand that, basically there's more reps and you're getting the same amount of patients, the productivity is going down, not up. If you add more reps, it should be, exponentially higher for the new amount of patients. That just didn't happen. And that's kind of where the forward guidance might be coming from. Either way, the name here power gauge was ahead of it. The technicals were ahead of it. And you could have been ahead of it too if you had the Chaikin power gauge in your toolbox. All right, we'll do this again soon. Take care. Until then, have a great weekend.